There has been massive multi-billion dollar losses in China's electric vehicle segment this first quarter of this year. Largely, this has been blamed on Chinese government COVID policies. Now the government is reversing, changing its mind, and bringing in potential emergency stimulus measures to further support Chinese electric vehicle manufacturers in their efforts to essentially take over the world. Hello my friends and welcome to the channel. I'm the Electric Viking. My name is Sam Evans and I'm coming to you here from Melbourne, Australia. As you know, the majority of the world's electric cars are manufactured in China. The majority of the world's batteries are manufactured in China. The future of the industry, frankly, according to most experts, is in China. Even companies like Volkswagen would agree with that statement. They've said it themselves. However, there has been massive multi-billion dollar losses this year. For example, NIO's earnings report showed it posted a net loss of RMB 1.78 billion in the first quarter of 2022. That's an increase of 295% year on year. Xpeng reported a net loss of RMB 1.7 billion in the first quarter of this year, compared with a loss of 787 million in the same period last year. That's an increase in their loss of 116.2%. Now, the only real company in China showing positive margins to its cars and to its business as a whole is BYD. So, amazing story for BYD considering they're going against the grain in China. Now, what does this mean? People are panicking. The government in China is panicking. There's no question about it. I'm not being exaggeratory here. That's exactly what they're doing. They're planning on investing billions more into this industry because they don't think it's sustainable seeing these kinds of losses from these companies. They've expected them to by now be making a profit, and most of them are not. Which comes back to my point, which I keep talking about in my videos and people don't listen to me. It's very hard to make a profit selling electric cars now in this current climate. Only Tesla is really doing it. BYD, small profit. They make most of their money from other things like making iPads for Apple. You probably didn't know that. They make phones. They make a lot of profit there. They make chips, all right? Computer chips. They make batteries. Yes, all those other things make them a lot of profit. Electric cars, less so, much less so than Tesla. Now, thanks to the Chinese government's essentially emergency meeting saying they're going to provide new stimulus measures, electric vehicle stocks in Hong Kong and the Chinese mainland have surged. So if you're a lucky person holding those stocks who's bought them recently on the lows, which I've been trying to get you to do, then that's great news for you. Now, China's Ministry of Industry and Information Technology, the MIIT, held an expert symposium. That's what they're calling it, but it was really just more of an emergency meeting on June the 17th, where participating experts offered specific policy recommendations on China's introduction of extraordinary measures to stabilize growth and market expectations, key point market expectations, according to an article posted Saturday on MIIT's WeChat account. Now, we don't know what these future policies are going to be. We don't know how many billions China's going to pump into the industry, but I can tell you right now, it's going to be a lot. It's not going to be a small amount. According to a report today from the official Shanghai Securities News, the government is looking at introducing a new round of extraordinary policies to stabilize growth in the manufacturing sector. What does that mean? Stabilize growth. That's just like their buzzword for saying, we've kind of screwed our own industry this year through our COVID policies, and we're going to change that. We're going to try and reverse that by putting billions of dollars into this industry. The impact of the COVID epidemic and rising raw material prices has led to a really serious divergence in profits upstream and downstream in China's manufacturing sector, according to CNETpost.com, potentially triggering a chain reaction that includes a lack of endogenous incentives for investment, the article said. In other words, people have been pouring billions of dollars into this sector over the last few years. Investment has slowed down. Why? Because it's getting more challenging. Now, you all knew this would happen. I mean, there's more than 80 electric car companies in China. There's thousands of supporting industries popping up constantly. It's crazy. Competition is fierce and margins are extremely tight. I mean, you can buy EVs for the same price in China as you can an internal combustion engine vehicle. Value for money is amazingly good. And all these companies, they're competing against each other constantly. So you can imagine how tough this would be. To eliminate some of the risk that companies are facing right now, the Chinese government is going to study the introduction of extraordinary policies to stabilize growth, including structural reform on the supply side, boosting consumer demand, and increasing investment in technological transformation. Well, this just all means one thing: money, money, money. Chinese government is going to put more money in it, boost this industry up, because what do they want to do? Well, we all know what they want to do. They want to take over the automotive sector. It's the last bastion of manufacturing that China doesn't really own worldwide. They want to change that. I can understand. I mean, they make everything else and they do it very well. Now, at this meeting, experts said that Chinese authorities need to further understand the serious challenges facing the current economic situation and prevent the problem of insufficient incentives of investment caused by the excessive divergence of upstream and downstream profits in the manufacturing industry. It's kind of like a bunch of jargon just for saying that there's price pressures on different companies supplying electric vehicle manufacturers, whether that be refining companies providing the lithium, whether that be companies building the parts for the cars. There's basically supply cost pressures all along the supply chain, and part of that's due to the inflation going on in the US as well. Now, at present, this divergence is apparently a big problem in China. Apparently, there are quite a number of companies on the verge of bankruptcy, and without some sort of Chinese government assistance, there was going to be big problems. It's going to be possible flow on to a lot of different industries. In April, the upstream sector received 47.4% of total manufacturing profits, which was a historical high, while the middle and lower sectors, especially the downstream sector, saw a profit ratio in a state of continuous compression, according to numerous reports in China. So what does this essentially mean? Well, it means that some companies in China are making money, right? Such as battery manufacturers, such as parts manufacturers, such as lithium refiners, whereas companies like NIO, XPeng and other car manufacturers are still making massive losses. And who are the face of the Chinese automotive industry? Are they those companies I just talked about? No, they're NIO, XPeng, right? Leapmotor, Wuling, Aura, Geely with Zeekr, Lynk & Co, etc., etc. The very visible face of the Chinese electric car market is struggling right now massively. Now, apparently, there's quite a number of small and medium-sized electric vehicle companies considering exiting because losses have been growing. For example, an electric vehicle company from a large province in central China is struggling to maintain production after it went into production in 2019. It's now no longer able to produce normally, thanks to these cost pressures. In addition to that, rising raw material prices have also affected midstream companies. Kangqi Technologies said its management will consider new plans for its auto parts business, whose gross margins and profits have fallen due to increased competition and rising raw material prices in the automotive industry. So far this year, CNF Post says that only upstream industries in China's manufacturing sector have maintained growth in operating margins, while midstream and downstream industries have seen significant declines in margins. So what's going to happen? Well, this is what China thinks is going to happen. These profits in the manufacturing sector will continue to struggle. This area is not going to fix itself this year. And this could lead to chain reaction, a significant chain reaction within the Chinese automotive industry. Chinese government is afraid of this happening. This is what they're saying. Continued upstream price increases will further compress downstream profits, and further contraction in the mid and downstream sectors, which are the main contributors to economic and job growth, could lead to further weakening of demand. If mid and downstream companies never see an increase in profits, they will not expand investment, could potentially go bankrupt and die, and that right now there's a trend of weakening momentum in the industry. And it's basically, really, most of this is being caused by the extreme COVID restrictions in China. In fact, the Chinese government actually thinks that this could be a tsunami that ends up destroying the Chinese economy. This situation, if not effectively curbed, they said, could have a negative impact on efforts to stabilize economic growth and optimize the supply system. Now, Chinese economists are saying that China needs to take action as soon as possible to prevent this from happening. So, the government, this is what they've said. They've taken a look at these risks and they're looking at introducing extraordinary policies. Extraordinary policies has been repeated over and over and over, that word. So, something extraordinary is about to happen, surely, right? And they may include boosting consumer demand, supply-side structural reforms, increasing investment in technological transformation, and a range of other measures. But, all of that stuff takes time. So what's the first thing they're going to do? Invest billions of dollars. That's what they're going to do. Now, because of this report, Chinese consumers believe that this industry is going to rebound big time. They think the Chinese government really wants to support the electric vehicle industry, the car industry, the automotive industry, the battery industry, and they believe that thanks to this massive investment of funds into this industry, there's going to be a huge bounce back later on this year. And I think they're right. I agree. Now, since this news happened, XPeng stock price is up. NIO up. CATL, the world's largest battery company, they're up as well. Goshan High-Tech, they're up. BYD up. And an exchange-traded fund, which tracks the NEV, or the electric vehicle industry in China, that's up by 3% as well. Not a huge amount, but it's enough to see a bit of confidence returning to this market. Chinese electric vehicle stocks have been absolutely smashed this year. Similarly to Tesla. In fact, some of them are even worse than Tesla. Some of them are down by like 70%. Just incredible declines, even though they haven't really done anything wrong. I mean, they've continued to grow their businesses. They've continued to expand their actual product offerings and improve their vehicles, improve their manufacturing efficiency. Realistically, really, they've been absolutely battered by stock price declines and simply by, the market perceiving that something bad is happening. So will the Chinese government be able to restore consumer confidence in the electric vehicle industry, the auto manufacturing industry, and the battery industry in China? I don't know. But I think billions of dollars will certainly go a long way towards helping these companies and in terms of making them continue to be able to do what? Right? To make cars, electric cars, at a much lower cost than their competition. That's not going to change anytime soon. The Chinese government is not going to allow that to happen. So whatever you may be thinking, well, consider this, right? Yesterday, JAC just imported a bunch of electric cars into Mexico. Now, these electric cars are pretty big. They're like a little bit smaller than a Toyota RAV4, but they sell for $20,000 to $24,000 US in Mexico, right? The day before that, BYD exported a bunch of cars to where? The Philippines, Costa Rica, Brazil. What about a week before that? NIO announced their plans to enter the United States vehicle market. What about MG? MG announced their latest electric cars, which they now plan on exporting to 25 different countries worldwide. The same goes for XPeng. I still believe, in spite of these very challenging headwinds right now, that the Chinese auto market will rebound strongly this year and probably end up by the end of this decade controlling at least 60% of the global automotive market. What does that mean? Is that a good thing? Is it a bad thing? Honestly, I think it's not a good thing. It's going to destabilize trade, and realistically, the West is becoming more and more dependent on China. But I'm just pointing out the facts here, just letting you know what's going to happen. If you want to buy a vehicle that's not from China, well, I don't think you'll have a whole lot of choice by the end of the decade. Most electric cars coming to Australia, coming to Europe, will be manufactured in China. The US, that's a different story. Thanks to the Trump trade tariffs of 25%, the Chinese are going to have a harder time cracking that market. They're going to go for Europe first, which they're obviously targeting now, and Australia they're targeting now, doing very well in Australia, and all the other countries. For example, BYD just said they're going to India, or it is already in Thailand. It's going on everywhere, and there's absolutely nothing we can do to stop this momentum. So what I'll continue to do is to provide you guys on news on the best electric cars, the best products. And you know what? If this company's doing the wrong thing, like what Volkswagen might be doing right now in terms of indentured servitude from ethnic Uyghurs in parts of China, well, I'll let you know about it. They're not the only ones. Others might do it. And if they do, I'll be sure to let you know. But that said, I think really what we all want to know, right, is what kind of vehicle can we get? What kind of batteries do we need for energy storage? Where's the future going? And the goal here is to keep on letting you guys know what's going on in the industry so that you can stay informed and potentially invest in companies that represent the future of the world. Thanks for listening. Let me know in the comment section below what you think. And as always, have a great day. Bye-bye.